Hello, so in this video, the topic would be different types of investors. We have here an article from eqvista.com. Okay, so different types of investors. As we all know, starting your own business could be very difficult, especially if you do not actually have the initial capital on you, and so you'd have to source out the funds, right? There are a lot of startup founders or entrepreneurs that have the ideas, but they don't have enough capital to actually pursue their ideas. Okay, so it's not easy to do, and it's almost impossible to get one from formal sources like banks and financial institutions, because normally when they ask for what the loan is for, and then you say for your business, then normally they require businesses to submit 2 years worth of financial statements, and then you have your income tax return as well. So it's kind of difficult. And then for an employee, let's say you're going to support your application with your employment as a source of income or source of funds. So sometimes the maximum amount that you can borrow from that is not enough to actually fund the business. So you should find, you should know the different types of investors which you can approach to seek funding for your business. Okay. So here we have introduction, right? Okay, so there are four main kinds of investors for startups, which include personal investors, angel investors, venture capitalists, and then you have others, peer-to-peer lending. Although currently, I'm sure you've heard of it, crowdfunding. So essentially, there are websites where you can post your project, and then users of that website can probably see your project, and if they're interested, they can put a pledge or inject a bit of the money into your project. Okay? But of course, normally it could be a success if you're going to share the project on your social media, let your friends and family know, and let them share it as well, so that it could reach more people, and with more people seeing your project, and if you've written it well, and if it's able to resonate with more and more people, then you can have, that much people funding your idea, right? Generally, the capital from these types of investors is utilized by the company to upgrade supplies and equipment, expand operations, or introduce a new product. Nevertheless, every situation is different, especially for startups, which is why companies should always take precautions before contacting an investor. Okay, so let's begin with personal investors. Normally, this is, recommended for startups. Okay, so friends and family, close acquaintances. Okay, I can ask them for support. If they are supportive of you, then you can ask them. But in other cases, it doesn't work because, sometimes they get envious and they don't want you to succeed or to become more successful than they do. So sometimes even friends and family could contradict you, could discourage you, and, could say things that would make you feel that it's not worth it. But even so, if you have a really good idea, pursue it, okay? And then find others who would be supportive of it. Okay, so where are we? Normally during the initial stages, so for startups, these types of investors are called personal investors, and even though they can assist with funding, there is a limit to how much they can invest in your company. Okay. It is often easier to convince a loved one to help you out, but there is a heavy documentation that is required, for which they can be taxed for helping as well. I think not so much here in the Philippines, right? Normally, those transactions are not really documented here. So if you are going to take a personal investor's help, ensure that you consult a lawyer to help you avoid any complications. So just make sure that you communicate well how long you're going to hold on to the money, how long it might take before you can return the money to them, and how long before, they might start earning money on their investments as well. And if there are, problems, complications, You should have a clear understanding of how you're going to repay it in case the business or your idea fails. Okay. Angel investors, okay, going back to that, you don't want to ruin your relationship with your friends and family. So you really have to communicate very well, okay, if you're going to get funding from your friends and family. Okay. Angel investors, those who put their money in small startups or new entrepreneurs. This is the most famous type of investors that most people may have heard about before. An angel investor might even be close to the startup owner, like family or friends, not so much. Angel investment is normally either a one-time off funding for the business to propel, or an ongoing investment to support and take the company ahead in the initial stages. Angel investors usually offer much more favorable terms as compared to other types of investors because, one, they do know how difficult it is to start a business. Secondly, they have experiences as well, so they're, much more lenient with regards to repayment terms. And then thirdly, they only provide investment to businesses or the ideas that really have potential. And then fourth, there's so much. They don't, in a way, they're not demanding. The repayment terms is less formal, and something like, if the idea or if the business after operations, only when it starts generating money, then, you can start repaying it. And they do not actually expect that during the initial stages, you're going to be able to repay them. Okay. Alright. The reason is that angel investors invest in the entrepreneur opening a business and not the viability of the company. But of course, from their experience, they could easily tell if a company or if a business is going to be feasible or viable. In short, angel investors are always focused on helping the startups to grow in the initial stages instead of obtaining a profit. Okay. As a matter of fact, angel investors are also referred to as business angels, seed investors, private investors, angel funders, or information investors. Okay, because they are much easier to deal with. They do not hound you. They do not expect too much. And they are there to help the startup grow and not for profit alone. Okay. Venture capitalist, an investor who offers capital to the startups that are believed to have long-term growth potential. Venture capitalists are normally investment banks, organizations, financial institutions, well-off investors, and any other financial institutions. Even though this is a risky way for investors to put in their funds, a successful payoff is worth it. So before you get a funding from a venture capitalist, there is going to be a lot of scrutiny on how feasible the business really is. And if they see that it really has a long-term growth potential, then that's the only time they're going to fund the business, right? So it's kind of hard to convince them. Okay. It's going to be hard to prove that your business is really going to be very profitable in the long run. A venture capitalist would put their resources into a company that they feel has the possibility to grow, and in return, they would demand equity in the company and get an overall say in the company's decisions. Since entrepreneurs get both open funding as well as the advice of an experienced and knowledgeable person, many tend to choose these type of investors because they would invest equity. They have, investment. They have a stake to lose. So they would be invested as well in how the operation is going to be, how the operation is going to be run. So in a way, that would help the entrepreneur or the business owner, original business owner, because he might not have the experience to know what to do. Okay, so a venture capitalist organization would help out a lot. Okay. But then again, communication of, the division of profits, the division in the management, that should be communicated well to prevent disagreements, misunderstandings. Okay. In a VC deal, large chunks of the ownership of the business are produced and sold to some investors via independent limited partnerships, which have been built by venture capital firms. At times, these partnerships are made up of a pool of various similar enterprises. An essential difference between the other equity deals and the venture capital deals is that VC deals normally focus more on growing companies that are looking for an abundance of funds for the first time. So if you want a lot of money for your startup along with some long-term experience and knowledge, this option is a good one, venture capitalists. And then last, we have peer-to-peer lenders. Groups or individuals who provide capital to small business owners, but to obtain this capital from these types of investors, the owners would need to apply with companies that are experts in peer-to-peer lending, like the Lending Club or Prosper. As soon as the owner's application gets approved by the company, the lenders would then determine if the company is right for their investment or not. Okay. So how to choose the right investor? It would depend on the individual, what he wants to happen to his business. If he can accept that, other people would come in and take part in the operations, then you could probably allow venture capitalists and investors equity-wise, okay? But again, there are those people who are not welcoming, they want to be sole owner of the business. So in that case, they would probably opt for debt financing, okay, and not equity. And so with regards to debt financing, it's safer for the lender, but it's a bit difficult to negotiate the repayment terms on the part of the business or the entrepreneur. Okay, so my personal opinion, when you are a startup, you should really allow others to share in the equity. Okay, as much as possible, give up to 50% equity in the company, okay? Or if you want 49% and you get the 51%, okay? So you can still have, majority ownership of the business, okay? It's the most you can give out. It's the most you can give out because, you have the idea, but you don't have the fund, and they have the fund, and it's your idea, so it's a good trade-off. Okay, where to look? Normally you can search these out, but in the Philippines I don't think there's much, but there are a number of Facebook groups for investors, startup owners, startup investors, things like that. And then of course, again, there's the crowdfunding, crowdsourcing. There are various websites you can check, if you want to try. And then you can make a list and then look at your networks. For introvert people who don't like speaking much, like myself, I don't really have much connection or network, so no thanks. Perfect your pitch. If you have a good business idea, you have to ensure that it's really going to be viable. Most of the time, entrepreneurs will think that their idea is the best, but they really haven't thought things through. So when they present it to others, it's going to be laughable or, it would sound silly. So sometimes you really have to check out your idea, validate your idea by going to Google and searching for, what do you call that? Similar ideas, because you might not know your idea is already something other people have thought of, and it's possible that it's already existing, or it's possible that there have been improvements on it already, and that it's already being marketed to certain groups of people, okay? And if once you've done that, once you've done your research, you've done your study, and if you still think that your idea is good, then I can continue, presenting your pitch to your potential investors, okay? Which types of investors to avoid? So you can read this. For one, you want to have an investor with the same perspective as you are, with the same values, and, same, in a way, you should have the same type of personality, in a way. Same values, because you don't want to keep arguing with him if at one point you start talking about certain things and then you realize that you don't have these things in common. So, you want to avoid those things. In a way, yung tipong, masyadong mahangin na investors, masyadong mayayabang, porke may pera, no? So, want to avoid those people. Okay? When you talk to them, they sound like they're lenient, they sound like they understand what you're going through, but they really don't. Okay? Kumbaga, gusto lang nilang magmalaki, gusto lang nilang purihin. So, no thanks. Right? How do I get introduced to investors and where to look? People often say it's not what you know, but who you know. The same is true for obtaining the right type of investors. This is why most entrepreneurs na successful, syempre yung mga extroverted, yung magaling mag-present, magaling magsalita, eloquent, and they're able to step out and speak with other people, diba? They approach them. They don't normally worry about what to say kasi, they have a lot of openings and they have the energy to talk to other people, get to know others, and to ask questions, okay? But, again, there are types of people na hindi masyadong carry gawin yan. High introverts, okay? Ganon lang. Your actions, certain actions would also depend on, your personality, your values, your perspective on things, okay? So, siguro yan lang. There are other information here. You can read them later on. So, ayan lang for this one. Thanks and bye.